Can an LLC business owner get life insurance for the value of the business, similar to having two owners in case of death or disability? Often when you have two owners of a business, they get a life insurance policy. Traditionally it was called key man insurance, but now is called key person insurance. And the idea is if one of those owners passes away, there's a life insurance policy. So let's say owner B passes away and owner A remains alive. Now, let's say owner B had a spouse. And so usually without an insurance policy, what would happen is owner B's spouse comes in and now they're co-owners. But a lot of times owners say, you know what, we like working together, but we don't want to work with each other's spouses. So they set up a buy-sell agreement, which is simply a contract that says, hey, if one of us passes away, the company has a right to buy out that owner for the value of their shares. So when owner B passed away, so owner B died, then the company has those shares valued. Let's say the company is worth $1 million. There might be a life insurance policy for $500,000. So the life insurance company pays $500,000 to the business. The business pays $500,000 out to the widow or the living partner, spouse of the owner who has passed away. And the shares of the company go into the company. So $500,000 goes from the insurance company to the business. The business pays the $500,000 to the deceased owner's spouse, and the shares that were now owned by the spouse or the deceased owner, they go into the company. As a result, the only owner left is owner A, because now the company is only owned by the shares of owner A. That's how a buy-sell agreement typically works, and you can use life insurance for that. Now the question here is, can you have a life insurance policy for the business if you only have one owner? You sure can. There's no problem. As long as the insurance company will do that, then usually they will, because it's going to be based on the likelihood of the owner passing. But let's think about the effect of this. If the money for the shares goes into the company when the owner passes, well, then that just is going to increase the value of the company. And that person's shares is going to go to whoever inherited that. Maybe a spouse, maybe a child, maybe a charity. It kind of depends on what their estate plan looks like. And if they don't have an estate plan, you rely on the default laws in your particular state, which is called the intestate statute. So usually there isn't a benefit in having a life insurance policy just pay into a company of a single owner. What you might consider doing, and is more traditional, is to have a life insurance policy on the business owner, which pays to the spouse upon that owner's passing. Because, for example, a lot of times in a small business, an owner is the breadwinner. The owner is working and bringing in money, whether male or female. And so if that person passes away and the family doesn't have that income, they want to have a life insurance policy in place. And usually that life insurance policy pays to the spouse of the owner, but you certainly could have it pay into the LLC, which is going to be likely owned by the spouse. So that is certainly a viable option.